We've all heard of the wild 1989 bubble in Japan. Those surreal days when the land around Tokyo's Imperial Palace, as you can see here, was supposedly worth more than the entire state of California. What you've probably also heard is that the Japanese market crashed, and for decades, the Japanese economy was stuck in a long, slow, deflationary slumber. Japanese companies became so cheap on the stock market that it should have been a value investor like me's dream to invest. But very few people took notice until Warren Buffett and Berkshire Hathaway finally got involved around 2019 and 2020. To me, that felt like validation. Finally, people were taking notice to the most interesting and undervalued stock market in the world. And Warren Buffett, perhaps the greatest investor of all time, really went hard in Japan. He invested billions of dollars in the biggest trading companies in the Japanese stock market, and now he owns around 10% of all of them. And since then, the Japanese stock market has been on a ride upwards. In February this year, the Nikkei 225, the biggest index in Japan, finally broke the all-time high record set in 1989, right after the bubble burst. This should be great news, right? And yeah, in some way it is. Japan has finally rebounded a bit and the economy is going better than ever. However, some of this optimism might not be justified. Let me explain. Since the great financial crisis in 2008, the Japanese market has now jumped over 300%. That's a pretty good return on investment, right? However, the earnings of these companies have only increased about 80% over that period of time. Basically, most companies on the Japanese stock market have a much higher valuation than they did in 2008 and 2009. And this is for one simple reason that you've probably heard about: productivity. If you don't live in Japan and come as a tourist, you might see Tokyo, for example, as a digital mecca with robots running restaurants and people looking ever so futuristic. However, if you look into these offices of the companies you're visiting, you might find that they're very old school. Fax machines still reign supreme, and even though there's a lot of talk about digital transformation and work style reform, the reality is much sadder. The average Japanese worker produces around 60% of the value of the average US worker. And in fact, Japanese companies are still so old school that they recently, this year in fact, celebrated the elimination of the floppy disk. Another issue is something called cross-shareholding. That's basically that the leadership of each company in Japan usually owns shares in another company in Japan, and so on and so forth, just like this image shows. And the main issue of this is that leaders from one company will vote in favor of what the other company wants in their shareholder meetings, and so on. So you get a status quo where nobody gets fired because everybody protects each other, and the growth slows down because there's not that much external pressure from shareholders to improve business. Now, let's talk about another huge issue to productivity in Japan: zombies. Yes, basically the zombies you see on TV, but in company form. Because you see, during the mega financial crisis after the 1989 bubble burst, there was a huge issue of liquidity in the Japanese market. And so, companies that were unprofitable begged the government for help, and they helped out. They gave cheap loans to basically every Japanese company that needed it, and those companies are to this day unprofitable and still rely on cheap loans from the government. These companies are zombie companies, and the only reason they're not allowed to go bankrupt is because the government don't want to create instability that comes from people losing their jobs. These companies are useless and they wouldn't be able to run without government subsidies. And so, with them in the mix of Japanese stocks, you can see why Japanese companies are so unproductive. But with all this said, Just like I said in the beginning, Japan has become the new hot thing again, and the Japanese stock market is rallying. Global investors are piling up, and excitement for the market has never been higher. Foreign investors seems to be chasing the narrative of Japan's long-awaited turnaround. But this is not entirely true, right? Yes, valuations are going up, but profits are not going up as fast. With that said, not everything is doom and gloom. There is still some solid companies in Japan that offer great value. If you know where to look, even massive companies like Hitachi or Panasonic have very low valuations and a huge potential for a turnaround, just as so many other companies in Japan that are not yet overvalued in the stock market. So, is the Japanese market a value investor's dream? Well, not really anymore, but it's not entirely a nightmare either. There are so many good hidden companies to be found. And if you go to konichivalue.com, you can see which ones they are. Also, please, if you like this video, like and subscribe and leave a comment. I'll be sure to answer every comment under this video, I promise. Bye bye!